Welcome to the bottom line, a wrap of the business of the day. And we start with a very rough ride of the rand. The currency hit around a 9-month low today. Remember, it was trading at around 14 Rand 40 earlier this week before the slide began. Today, the rand weakened to 14.96 to the dollar. Now, that is dangerously close to 15 Rand to the dollar. It was last above 15 Rand to the dollar in October last year. There are global factors, but also local issues that are weighing on the rand. By the way, remember that an upward trajectory, we see this graph going up, means that the rand is weakening. That means because it will cost you more rand to buy a dollar, so a higher value here, in fact, means a weaker rand. This is not good news. The rand's fall partly due to the ANC's open division on the mandate of the Reserve Bank. Now, the bank tries to prevent the rand and prices from fluctuating too much, protecting us from inflation, which can erode the value of money in your pocket. But the Secretary General said that the party was looking at changing the mandate that suggests lower rates with a possible side effect of inflation. Any perceived threats to the independence and current mandate of the bank could affect investment, and here you can see it already has. Well, there was movement today. ANC national officials issued a statement through the office of the ANC president. It said ANC national officials had met and affirmed the current mandate of the bank as per the Constitution. Now, the statement says it is the ANC's desire for the Reserve Bank to be publicly owned, but that'll come at a cost, and it's not prudent given the current economic situation. The mandate issues seem to suggest that the Secretary General, Esma Khashule, spoke out of turn. That statement issued at about 4:30 this afternoon. We'll see if the rand gets a little bit stronger on that. Now, another issue, of course, affecting the currency is South Africa's dismal growth. We went through a recession last year. I showed you this earlier this week, and then confirmation coming through this week of a significant contraction in the first 3 months of the year. Well, we've been asking this week, how do we as South Africans deal with basically what we're in is economic decline? And I'm joined by Mduduzi Luthuli from Luthuli Capital. How are individuals coping? Welcome to you, Mduduzi.
Thanks for having me.
So GDP is bad for the country. Yeah. What does it mean for the man on the street?
You know, these are very troubling times, because when you see those numbers, when you see such a drop in GDP, what it simply does is that it erodes whatever little confidence is left. We all know that South Africa's biggest problem is, how do we get this economy growing again? If you can get the economy growing, you indirectly solve the job problem. You know that we have a crisis there, and the cheapest, most quickest way to generate growth is just confidence. There's a direct correlation between business confidence and an increase in employment numbers. And when you see things like that, it really makes you ask, what happened to the new dawn? What happened to Ramaphoria? But one at the same time can't be too surprised when you have almost 40% of the working population unemployed, when you have systematic problems at Eskom. You know, and Eskom is a big problem, not just because of the current debt value, but even there, there's a direct correlation between the megawatt output of Eskom and GDP. And when those numbers were released, the two biggest sectors that suffered was manufacturing and mining. These are also sectors that, while it's important not just that the sector is big, but they also employ, one can say, low-skilled labor. So they're very good employers in terms of having a huge impact.
And we know for every miner, there are many dependents.
Exactly.
Hoping that miner keeps his job.
Exactly. Yeah.
Make it stark, because you deal with investments. You also look at personal finance, but you deal with investments. So the ANC arguing about the Reserve Bank, what does that mean for the value of people's pensions, government pensions even?
Exactly.
This week?
You know, again, we know that 2 of the credit ratings have already downgraded us. Moody's has been more than patient with us. Even they, a few months ago, well, not a few months ago, just after the election, probably sent out a statement which was the strongest to say, we have been patient. What you as South Africans have asked for is allow the president to be elected, because he was president, but he wasn't really president. Give him a mandate, and let us see from you guys that you will start implementing strong reforms to get the country growing again. And if you think of last year's investment summit, Davos, the Ramaphosa, the New Dawn, where people were really excited about what is happening in South Africa. Are we going to turn this around? We want to invest with the most industrial economy. To now, so shortly after the election, it seems that that good news is gone.
Yeah.
What are you doing? And now we're here fighting about the mandate of the Reserve Bank. You know, the mandate of the Reserve Bank is price stability, control inflation, and make sure there isn't fluctuations in inflation and in interest rates. And in doing that, people forget they want to increase the mandates of the Reserve Bank to say, think about growth, think about employment, think about this. When they make those decisions about the interest rates, when they look at that mandate, there are specific teams. There are teams that focus on economic development. There are teams that focus on growth, that go and speak to the MPC. And all that goes into that decision making, whether to increase and decrease rates.
And many would say price stability is good for the poor. You don't have inflation taking away the value of your money.
Exactly. You know, in the investment world, there's no such thing as a bad market. I always say when we talk about a bad market, what we're saying as an investor is that there's too much uncertainty. Because even in a market crash, when the market's going down, you can make money, you know. And when you have people attacking the Reserve Bank, attacking possibly interest rates, you know, exposing us to possible fluctuations, all you're asking for is uncertainty. This at a time when we know that as a country, we don't have a tax base big enough for us to run the country, because remember, the government's income comes from collecting taxes. So we are dependent on foreign direct investments. People always say, well, forget the foreigners, you know, let's look here and fix that. Yes, but we still are reliant on foreign direct investment. And foreign direct investment is you're asking someone in London, New York, Tokyo, not just to buy South African shares. You're asking them to make a commitment to the country, to come here and break ground, build a factory, hire people. And how can you ask someone to do that if what you're offering them in return is uncertainty?
Well, what is happening on the ground? So let's look at the uber rich. Are they still insulated from what's going on?
You know, one of the things you learn in economics is that you can't build a society based on what the rich are doing. And what I mean by that is wealthy people have options, you know. And
they're not always affected by what's happening in terms of economic growth.
Exactly. You know, if you are super rich and our country does become a Zimbabwe or Venezuela, you have options. You can leave, you know. Yes, we're highly dependent on the super wealthy for the tax collection, but policy can't revolve around them, and you can't focus too much around the wealthy. Just like at the same time, and I know this is not a popular opinion, you can't focus too much on the poor, because if you're poor, unfortunately, you are never part of the economy, and that's a whole separate problem. You need to focus. It's how to get you into. You need to focus on that middle class, to say, because you're rich enough to care if the roads work and the hospitals work, but you're too poor to leave. You know.
So let's focus on them, because we're running out of time.
Sure.
Are middle class people, what are you noticing? Are some pulling out investments? Maybe because cash is tight, so you start messing around with your future, I guess.
Most definitely a worrying trend. We're seeing people more and more coming to ask us to say, can we access our pension funds, our retirement money? So
trying to get money now.
Trying to get money now, and almost having the attitude to say, you know, when you say, don't access your pension money, what are you going to do in future? And the attitude is almost like, I don't care about the future, because I'm struggling now. I need to pay rent now. It's difficult. We're seeing increase in outflows. You know, we work in an industry where we literally go to people and say, give me your disposable income so that I can grow it for you. And what our clients are saying to us is, what disposable income? It's getting incredibly difficult just to get by.
So final question, do you have any advice I don't know if when times are tough, what can you do to protect yourself?
You know, I think people sometimes dislike our industry because we don't have a silver bullet. We don't have a get rich quick scheme, and it's the same stuff where we're saying now more than ever, if you don't budget, you're going to be forced to budget. Increase that emergency fund, because what we're also seeing is an increasing trend is retrenchments. And a lot of South Africans are one salary away from being homeless, from being destitute. There's no buffer there. We have a retirement investment crisis here where less than 4% of South Africans can actually retire. For the other 96%, you're going to have to work till the day you pass away. And that's just getting worse because people are not funding the long term. They're not funding the short term. You know, now you need to really lean on those personal finance principles. Build an emergency fund. Make sure that you're properly insured. People are cancelling insurance for their cars. All those things, you know, and I know it's difficult. But this is exactly why when you meet a client, you emphasize we need to build those reserves so that when these times come, you can survive this. And this doesn't mean the end of you don't become destitute because of times like this.
All right, thank you for your insight tonight. Mduduzi Luthuli, Director at Luthuli Capital. And yes, tough times for South Africa.